Hi there, and welcome to another episode of African Business Stories, your insight into female innovators and entrepreneurs building and running businesses in Africa. I'm Akego Koye, and on the show today, we continue with our series of focused conversations around the emerging solutions and tools for businesses on the continent. I'll be chatting with Amanda Cotterman, founder and managing partner at Equalife Group, a Nairobi-based venture debt company advising and investing in a range of sectors in East Africa. Equalife is expanding the funding options available to companies and is currently seeking to raise a $20 million venture debt fund, specifically targeted at sustaining companies through the economic crisis being fueled by COVID-19. Let's get into it. I know that you went to Harvard Business School and that you worked at Morgan Stanley in China. Was it in Asia or somewhere? But I know that you speak Chinese. And I really wanted to understand, how did you come to live in Nairobi, and how are you just, if you can just walk us through that. Why Nairobi?
Sure.
Why Africa?
Yeah, I get that question a lot. And it's always interesting because now I'm 8 years into living in Nairobi. And so this is home. And I sometimes don't always have the opportunity to reflect on how I got here. But I started my career in Asia, as you mentioned, with Morgan Stanley and corporate finance. And my focus when I was in my undergraduate studies was in economics and Chinese studies, as I had seen a lot of the growth potential and had visited several times to see where the economies in Asia and China specifically were going, and had an opportunity through the work I did to work with some of the technology companies coming out of China and the region on helping them raise capital. And what I started to realize very quickly was that there was a lot of similarities across regions, both in emerging and developed markets that weren't always able for entrepreneurs or business individuals to connect those dots. And that was a value add that I really was able to provide, having the opportunity to not only travel for work and pleasure, but also through kind of my past experiences, be able to connect those dots. And after being part of kind of the tail end of the fast growth in China, really wanted to be a part of the next emerging economies that would have similar growth stories. And so I ended up going back to business school to start to do my research and see where I thought the next opportunities were, both geographically as well as within the larger business community. And that's how I landed specifically on the African continent and then into Nairobi. Being part of kind of the growing middle class in China, and seeing what was happening there and working with companies that were catering to them, I saw a lot of similar trends on the African continent and then in East Africa. And so came right after business school to Nairobi as an entrepreneur to try and build different businesses that I had seen in Asia and actually other parts of the world and connect those dots. So there was a plan to it, but also came taking a big risk into a new geography, into a new sector, to really try and add value.
That's interesting. So what business did you set up, or what businesses did you set up in Nairobi?
Yeah, so it's been an interesting journey. My first business that I was working on was in the fitness and health space. But unfortunately, it was in the mall where there was a terrorist attack back in about 2013, I believe, at Westgate Mall. And so that was a massive learning experience to be part of that, but also to see how you have to pivot quickly. And so landscaping to see what are other opportunities and needs in the market, focus on the education sector, and built an early childhood education business from concept to profitability, which was catering to middle-class working professionals in Kenya who were trying to
Right.
balance building their careers with also making sure they had safe, reliable, and stimulating childcare for their children. So a concept that has
Interesting.
actually been developed and successful as an investment in both emerging and developed markets around the world, but hadn't yet come to Kenya and hadn't also seen it in other parts of Africa.
Interesting. So basically you were in Kenya to stay.
Yes, but I don't know. I think with everyone's journey in life, no matter where you are, you never know where it's going. So it has turned into Kenya to stay, but didn't know where this journey was going to take me when I first moved here in 2012.
So you are still in Kenya, you sell your education business, and you decide to go back into the financial space, still as an entrepreneur, but now funding entrepreneurs. Can you tell us a bit about that?
Sure. Well, I've gone back into the investing world, but I still consider myself an entrepreneur as I've launched this fund. But when I exited my business about 2 years ago, my career had really transitioned into this venture capital ecosystem. And it had grown
Right.
across the continent over the last 3 to 5 years. Um, and there's a lot of new equity players who've come in, both informally and formally, local funds, international funds, angel investors. And they were investing equity into
Hmm.
businesses, but we hadn't seen other financial instruments that you see in other venture ecosystems around the world, like debt. And as someone who
Right.
had gone out to raise capital and had those conversations with investors and thought through what made most sense for my business, realized that having different options for financing is really important as an entrepreneur, not only to empower you in thinking through how to grow your business, but also what makes financial sense. And so I
Right.
started to play around actually with my own savings to test out this concept. And
Okay.
through engaging with venture capital professionals from other markets, learned about the venture debt asset class, which is this silent asset that exists in most venture ecosystems. About 10 to 15% of the money deployed is coming through debt versus equity.
Hmm.
But it's a great instrument to allow entrepreneurs to minimize their dilution as they take on more capital to prove out part of their business, to improve and grow that revenue, to then increase their valuation at the next round. And so when I started to
Right.
invest, I saw that that was needed in this market, but also you have a lot of venture businesses that don't look like what you see in Silicon Valley or even other venture ecosystems
Hmm.
like the Indian ecosystem. And these small and growing businesses that are innovating on their business model. Ones that look a little more like brick and mortar versus high tech, but have traditional
Hmm.
debt financing needs and can't get those from a traditional lender like a bank. And so started to figure out ways we could structure this
Right.
product for them as well. So it's been an interesting journey, once again, as an entrepreneur still, but as an investor over the last 2 years.
That's great. So, what kind of challenges have you faced with setting up this new fund in Kenya? And what markets do you? Is it just in East Africa at the moment?
Yeah, so right now we're in East Africa because this is the market we know well. As someone who's run a business here, I know how to look at these businesses and connect with the entrepreneurs and even be able to provide value creation post investment. That being said, we look at investments across the continent. We're constantly engaging with those who need debt financing and seeing if it doesn't fit with our comfort level, if we can help them before we can raise a Pan African fund. But there's always challenges when you're starting something new, and it's for us, it's been really trying to educate the market, teach them what this asset class is about and how they can use it appropriately in their capital structures. And also figuring out how to work with other investors in the market here. Sometimes they're not used to um, having to structure or diligence deals in the same way. And we're always trying to find ways to collaborate. But it is a bit of a learning curve as a new player here.
Hmm.
But that's the beauty of being an entrepreneur. You have to learn how to adapt quickly.
Right.
And so we're doing that as we face different challenges.
So what kinds of businesses have you invested in? Because I know, I mean, when we think of VC funding in Africa, everyone's talking about tech and more tech, So I'm just wondering what other class of businesses, have you invested in?
Yeah, so we do look at tech. We've invested in a factoring business,
Okay.
which does, it's a fintech business to provide financing to SMEs through their tech platform. Invested in a coding school
Okay.
that is using different teaching methods remotely and in traditional form to provide higher education coding skills, but also looked at those more traditional, those small and growing businesses that I mentioned. So a few in agriculture,
Okay.
a milk producer who's actually
Hmm.
innovating by distributing milk through what's called a milk ATM. You put in the amount of money you can afford in milk or need, because
Right.
consumers don't need a liter or
Right.
a gallon, whatever market you're looking towards. Here, they just need what they can consume with their cash flow, but also maybe their refrigeration needs.
Right.
So we've invested in kind of the spectrum from tech to traditional, but those who the debt makes sense to come in alongside their equity investors.
Right. Right. So I also read that you didn't actually set out to be a women's only fund, but somehow the majority of the businesses you have funded have been women owned. How did you, have you, looking back, how do you think you arrived at that point?
Yeah, no, I mean, it was something very interesting. I didn't realize until it was pointed out to me that 60% of our investments were in female founded and led businesses. Actually, 100% of our portfolio has majority female employees. And now that's actually been a conscious switch for us as we now focus on gender equality, SDG 8, as we, and 5 with economic prosperity and gender equality as we move
Hmm.
forward with growing our fund. But I think as I reflect on it, as a female founder myself, I really understand the challenges of both raising capital and running a business, and some of the struggles trying to articulate your goals and what you're trying to accomplish in a very cutthroat industry like financial services. And so
Right.
when I engaged with different businesses out there, what I found was a lot of the female founders were a lot more vulnerable in telling their story, their
Hmm.
goals, their vision, and also acknowledging their challenges, which you don't always get when engaging with those seeking funding, because they're really trying to put their best foot forward and pitch you. It's a
Right.
sales pitch. But by these women being more vulnerable, either on purpose or not, it allowed us to have a more dynamic conversation and really get to the bottom of who they are and what their businesses are trying to accomplish, and if this funding could be useful and appropriate for them. And I've just seen over time with post-investment support, this has even been
Hmm.
more relevant as my portfolio companies, as these founders have challenges, both personal and professional, in running their
Right.
businesses. There's a lot more comfort level in engaging with another female as a sounding board and
Right.
coaching them through that. So it's been a quite a positive experience, I think, for both of us, as it's allowed me to diligence and identify strong businesses from them being honest and allowing me to dig deeper into who they are, and I've been able to
Right.
hopefully provide that additional mentorship as they navigate growing their businesses.
That's very interesting. So what do you think has been the impact of your fund for women businesses on the continent?
Well, I think one thing is just this access to capital.
Right.
When venture debt comes into the picture, it's at a time where they really need that additional liquidity to get them to that next level of growth, to show to the larger market their success. And they haven't been
Hmm.
able to access that. And so it's just providing another avenue of investment and a different option that they might not have known to seek out otherwise. And I think it's being able to continue to promote other women. It's all about collaboration. And,
Yeah.
there's the saying out there, you can move faster alone, but farther together. And it's
Correct.
really going in together with our entrepreneurs to help them get to that next level. And women don't always have that opportunity, or it takes a lot longer to give investors or other stakeholders comfort. And so that's really something we focused on.
So you talked about post-investment support. So what kind of post-investment support do you give to your founders?
Yeah, well, it's an interesting one because we are a debt fund, and it's
Hmm.
a little bit different on what's expected versus what we actually provide. Because with debt, your upside is capped. Interest is my risk. It's not
Hmm.
necessarily my time. And we know what our return is on that interest and
Right.
principal. Versus with an equity investment, the sky's the limit. It's the amount of support those equity investors provide is and helping that
Hmm.
company grow and continue to fundraise, they get to reap. But we still believe
Right.
it's really important to walk this journey with our entrepreneurs. And so we always take a
Hmm.
board observer seat to be able to support them in navigating those conversations with other investors and strategically planning for their growth. And we also help them through our networks on the ground here connect with other partners, suppliers, customers to help them grow their business. And then our goal
Right.
is also to help them to become more financially literate and sound in how they manage their finance function and analytics so that they can go on to be raising more relevant capital, especially on the debt
Hmm.
side as they move forward. Part of what we provide is this capital at a time, especially for these small and growing businesses that need debt, providing at a time when they can't necessarily articulate or manage their debt needs in a way that those traditional lenders understand. And so being able to help them figure out how to manage that finance function so that they can get to that next level with banks and other private investors.
Right. So this is clearly a new type of funding, a new class of funding on the continent. So are people aware that this is available? How do you get the word out? How do people know that this is available and that they can actually tap into this type of funding?
Yeah, I mean it's new in the sense of trying to structure it and use it as the traditional venture debt asset class. But there have been other private debt investors and impact investors who have tried to fill the
Okay.
gap in other ways.
Okay.
It's really about pounding the pavement once again, like an entrepreneur, getting out there, sharing the story, providing our support to entrepreneurs and equity investors and thinking through the capital structure and makeup to show them what makes sense and if this is the right instrument. The nice thing with debt, I like to say, is we're everyone's friend. You
Right.
can take it or leave it. There's always another deal for us, and it's a volume game versus equity is about trying to find that secret deal or the best one out there and be the only guy in. So it's really about
Right.
trying to help everyone think through what makes the most sense. Because if this makes sense for them, then it's going to be a great return for us. If it doesn't, we're going to feel the pain later. So, out there at conferences, out there in platforms like this, spending one on one
Right.
time with equity funds and entrepreneurs to walk them through what debt and venture debt can look like for them.
So is it okay for me to ask where you raised? I know you started off using your own capital, like you said, but surely you're no longer using just your capital anymore. So is it okay for me to ask how and where you go to raise this capital to do all this investment?
Of course. Yeah, as I said, start with my own, which I always think is the best way to learn because you definitely make different decisions when you have your savings on the
Right.
line. And then just like any entrepreneur going out to talk to individual investors or those angel investors, but more in an LP sense now, and have raised from that private investor community. And now, as we're pivoting to try and raise a specific funding for COVID-19 to roll into a larger venture debt fund, now we're looking to raise from the more traditional LPs, like the DFIs out there,
Right.
foundations, family offices. But slowly building those relationships and trust to be able to bring them into our funding structure.
That's excellent. So how do you think being on the ground has helped you? I'm sure it has, because I think that's the best place to be. But just from your own reflections, how do you think it's helped you being on the ground?
Yeah, I mean, I don't know how you do it if you're not on the ground in any market. You really have to understand not only the cultural nuances, but how these
Right,
economies work, and have the networks that you can call on that are trusting relationships to not only
right.
diligence these deals, but protect yourself. Think through, is this the right company you want to go into, and get the inside scoop. So it is a deal breaker that I'm on the ground, and it is directly can attribute that to my success here. Um, but it doesn't come easily. I mean, as I said, it's been years of building these trusting relationships. And I
Right,
think the most relevant to me is running a business here. I know what the consumers look like. I know what the talent pool looks like, and the challenges it takes to actually build a business. So I can flip that in my diligence process to think through what these companies are actually telling me, and if this makes sense, the story they're selling, and if this capital can actually be useful to getting them to the next level.
Amanda's story of becoming a serial entrepreneur in Africa is truly inspiring. Her recent venture debt fund, even more so. Access to finance is an ongoing issue in Africa, and now we're faced with an economic crisis. Businesses desperately need more funding options, and Equalife might be onto something. So yeah, you were talking about a fund that you set up specifically for COVID-19. Of course, the impact of COVID-19 in Africa is still to be seen, but clearly a lot of businesses are under stress. And it was interesting to read that you set up this fund in response. So if we can just hear a little bit about the fund and what you feel it can do for businesses in this time.
Yeah. So when COVID-19 hit in Kenya and across the African continent, we were just inundated with requests for debt, both from entrepreneurs as well as from equity investors for their portfolio companies.
Right.
And at first glance, we said, gosh, it's really risky now. Who knows what's happening out there? And should these companies be taking on debt, and can they service it?
Right.
But reflecting further, realize that actually venture debt is a great asset to adapt in a crisis. And look, that's what
Hmm.
we've been doing for the last 2 years, is adapting the asset class for Africa. And we said, why not? There's no rule out there saying you can't keep adapting it.
Right.
But in a crisis, what we found was that the diligence and the approach of choosing the right businesses stays the same. We're just not funding for growth to improve your revenue for the next round. We're funding for sustainability so that
Right.
you can get to that next round and get to it on your terms. And then we've
Hmm.
kind of really put that impact focus at the forefront, making sure that we look at those businesses that have had a slowdown in their revenue and cash flow, but are instrumental players in the local economy and are employers of the local population. And if they had to fire individuals, or if there
Hmm.
was a huge slowdown in their operations, it would not only affect the progress that's been made in the larger African venture ecosystem, but would also have
Right.
a negative effect on these local economies, and slow down the post crisis success and growth for them. And so I partnered with a colleague, Celine, to really focus on this fund.
Right.
And we're out there fundraising. Look, we said this is a need, and we have an asset class and a track record and an understanding of this market. And we have a very strong pipeline we can start deploying capital into today. So we're raising our hand as one option in the market. We haven't seen many others who
Right.
have thought through how they can respond to this yet. And we hope others will join us. And if others have better solutions, that's great. But right now we're out there talking with different LPs to see if we can make this a reality.
Okay. And what's the uptake been like?
Yeah, so we've had a lot of positive responses from the LP community, and we were pleasantly surprised because this is a global crisis, and we
Right.
weren't sure, what people's appetite or focus would be on the African continent. We're also seeing a lot of different LPs are still trying to form what their response will be to COVID. It was a little slower than we initially anticipated, as organizations were really trying to get their staff and their internal organization in order before they looked outside. There's a lot of great solutions we're seeing as these investors start to reflect on supporting existing GPs and existing portfolio companies. And now I think we're at this next level we're seeing hopefully in the next 2 to 3 months,
Okay.
investors starting to see what they can do to help those that are new to their portfolio, and how they'll be able to support the larger ecosystem.
So that's what I was going to ask. So when the fund is are you going to wait till it's fully funded before you start deploying resources, or are you going to to give as you receive? Like how do you think it would work?
Yeah, we would love to be able to give as we receive. And so looking to do a first smaller close, and even right now out in the market, looking to raise for a few of our top pipeline businesses so that we can not only have that impact today, but also signal to the market that it's both a need and an opportunity. It's not a handout. You can
Right.
actually get a financial return from it. Because I think that's a huge worry right now is as many different funders realize this is needed, but there's a fear on if they can actually recoup their capital, and see that return on it. And we want to be able to signal that to the market.
That's a really tough one. A lot of these businesses are under stress. And like you said, this venture debt is for sustainability, helping them to ride the storm. So their ability to repay is could be called into question. So how do you give LPs confidence and comfort in the investment?
Yeah, well, I mean, LPs have to do their diligence as well. And one way they can do that is look at our track record. They can see
Right.
how we've diligenced businesses in the past, how we track and add value to those investments, and how we've been able to successfully exit those. And so, historical information is always very relevant. Also, being able to look at the existing pipeline and look at our diligence notes to see if they really trust the types of businesses we're looking at, but also remembering that this isn't a free for all. It's not just
Right.
anyone who needs money gets it. We still have a mandate of what we look at and a diligence process for someone to be considered for investment. And not
Hmm.
everyone's going to get investment. And that's the hard conversation. We can't help everybody. And so what we're
Right.
saying is within our little focus in the venture ecosystem and the types of businesses we're looking at, can we help? Realizing that others need to be able to rise to the occasion and help in either donations or investments in other types of businesses, but keeping within our lane and our expertise, to make sure that we are fulfilling our fiduciary responsibility for investors on not only the impact we're having, but the investments we're making.
So do you have any thoughts about the post-COVID business environment in Africa? I
Oh
mean,
gosh,
it's
that's I'll look into my magic 8 ball over here.
go on.
Look, I mean, it's been crazy the last 2 months, first of all, for us all to watch what's happening on the continent as we watch what happened in the rest of the world. So, um, economies have definitely been hit, but the spread hasn't been there like we've seen in the Northern Hemisphere. And
Hmm.
so there's a lot of unknowns. I think we'd be remiss to say this is a quick recovery. It's probably something around 18 to 24 months before we get back to where we are today. We've unfortunately probably made a few backward steps in the economic growth in many of these countries. But there has been a lot of resilience on the ground. I think what we are keen to see in the next few months is how the different governments are able to rise to the occasion and be able to support either from external funding that flows through them or through their own funding to support the larger business community here and the citizens of these countries. And I think that will play a huge role in really understanding what those long-term effects will be in the region and on the continent.
Thank you so much for that. So one last question. So what's next for Amanda?
Great question. Look, I'm always adapting, always looking for the next opportunity. Have always kept an open mind of where this goes, and have always been keen to collaborate with others out there. And so, look, it could end up that we are able to raise this money and it goes into a larger fund. It might be that we have an expertise that allows us to join forces with more established organizations and come in-house. There's really no limit on where this can go, and just keeping an open mind and having conversations with different stakeholders out there to see how we can collaborate with our knowledge and expertise on the ground here.
That was Amanda Cotterman, founder and managing partner at Equalife Group, East Africa's premier venture debt fund. You know, access to capital has been and continues to be an issue in Africa. So we're seeking to highlight companies like Equalife, innovating and pivoting to bring funding solutions to the market. I believe that funding for sustainability should be a focus during this period. Well, thank you so much for listening. Please remember to subscribe on Apple Podcasts or wherever you listen to your podcast, and do write us a review so we know how we're doing. I am Akego Koye, and you have been listening to African Business Stories.